Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be continuing to work with the EMA envelope with which we are using the MinMax and of course to optimize the entry and exit points, we are also going to use the ATR. I hope by now you are well familiar with the moving averages envelope and the min-max. It's pretty simple. Before we go into the details, here is the standard disclaimer. Again, I would like to remind you that this is simply a tutorial session and no claim is being made regarding the profitability or otherwise of the algorithm which we will be developing during the session. And suppose if you want to use any of it, I would recommend that you do extensive trial runs and then allow it to run for sufficient time on the demo account to get a clear cut idea of how efficient or how well the algorithm is working. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. Let's get started. Here, there is a brief synopsis of our trading idea. So, we are trying to build algorithm which will be looking for sell orders if the EMA envelope is falling, and for that we are defining the current values and the values one day back. That is the time period of 6 candles back. We are using the shift 6 for defining the 4 hourly candles 6 periods back, that is 1 day, 6 into 4, 24 hours, and we will be comparing the current value to the candle 6 periods back, and if it is falling then we will be looking for the sell trade, if it is rising then we will be looking for the buy trade, and of course we want the candle close to be above the lower band for the buy trade and below the upper band for the sell trade. So basically we are trying to look for trading opportunities with the trend. So if the momentum is in the bearish territory, the algorithm should be looking for sell trade, and if the momentum is bullish, then the algorithm should be looking for the buy trade. But that's not all. What we want to make sure that the trading is happening closer to the EMA envelope band, and it shouldn't be the case that after extensive rally new trade should be opened. So we are bringing in another condition where we will be utilizing in the min-max, and we will be putting a cap when the trading can happen. We want the minimum value to be below the higher band when the buying is to happen, and for the sell trade we will want the maxima price to be below the high band for the sell trade. And also to make sure that there is good enough momentum, we will be putting in the condition utilizing the ATR of at least 30% of the ATR price move should be in the prior candle, and it should have closed in that direction. That is, if the buy trade is going to happen, we want the prior candle, the last 4 hourly candle, to have closed in green with at least 30% of the ATR move. The difference between the closing price and the opening price should be 30% of the ATR at the minimum, and same condition for the sell trade also. The difference between the open price and the close price should be at minimum 30% of the ATR. So that will remain the case. And also we want the trading to happen only when the price is below this upper band of this envelope. So we will be putting in additional condition using the last tick price. The tick price should be within the band, and also for the buy trade it should be above the lower band. So these are the basic requirements, and also we can go for a static stop loss and target combination, or we can even keep the stop loss and the target combination dynamic using the ATR and the calculation expression. So we will try to see, depending on the ATR values, if there is too much volatility, we can keep the prices dynamic for the highly volatile times. With reducing the lot size, we can do that also. And if there is not much volatility, then we can keep the priorly determined combination with a higher lot size. So both way we can do it. So let's do it. This is a setup so far which we developed in the yesterday's session. Here there is a standard instrument subscription. We are basically working with the Euro USD. You can of course utilize any other underlying instrument as well as per your requirement. So you simply have to change the instrument here in the Euro USD's place. You can bring in another instrument and then you have to match that instrument here in the second option of this if block. The position amount has been defined at 0 so that no open or the pending order should be in the system when the new trading decision will happen. EMA envelope is defined on 4 hours. So here is shift 0 and this is shift 6 and we will be comparing these values. The historical candle of 4 hours here. We will be comparing the candle closing and the candle open and the difference in between. Then this is the min-max conditions for last 5 hours. We want the last 5 hours min-max to be within the price band which we are going to define. Then this is the ATR setup with shift 1, that is yesterday's ATR value. And then these are min-max conditions to make sure that if there are undue momentum and if one trade closes in loss, then suddenly next trading shouldn't happen. For that, next trade should happen only after due conditions are fulfilled. So we will be bringing in this requirement to make sure that there is stability in the price action and no undue trades are taking place. So now we have to continue this setup. So for today we will bring in some calculation expression block to define the necessary range for us to work with. So here is the first calculation expression. We want the trading to happen only if the last candle has closed in red. So it's pretty simple to do that, and we will be utilizing the if conditions when joining the pending or market open orders. But one more condition is that the difference between the opening and the closing price should be more than 30% of the ATR. So now we need to calculate the difference between the candle 15's opening and the closing price. So when the candle will be closing in green, we will be deducting the candle open price from the candle close price. So here is the candle 15 candle close. Candle 15 is this prior candle of 4 hours and minus candle open and here the convention as per the MS Excel, A1 minus A2, and this will be the can buy candle difference. Let's save it. Now we want this difference to be at the minimum 30% of the ATR, and we want same condition for the sell side also. So we will need two calculation expressions. So we bring in for the sell side, the candle open will be higher than the candle closing. So we take candle open here and then deduct the candle close should be sell candle difference. So it looks all good. Now we will compare the difference to the 30% of the ATR value. So we need to bring in the ATR requirement. ATR is line 18. And we multiply it with a new variable, double, and it will be minimum ATR difference, and let's okay, it's good, 0.3, and we will multiply the ATR by 0.3 to get a value which will be equal to 30% of the ATR. So we have this minimum ATR difference for buy and sell. So we have defined these conditions now. Now we will need to calculate for our dynamic buy and sell price as well. So what we will do, we can leave one row empty, and then as required we bring in the calculation expressions while continuing to build the buy and the sell side. So that will be much easier for you to understand rather than just doing the calculations now. So we leave the calculation expression block here, and we straight away move to the building, and we will need now multiple action blocks. So we will need to go for logical. Okay, we got it, multiple action, and we place the multiple action here. And now we bring in the if conditions. We want last candle to have closed above the lower band for a buy trade of the current EMA envelope, and that is shift 0, and the candle 15th close will need to be compared. So we bring in the candle 15th closing price, and it should have closed above the lower band. So this is our first requirement. Then the last tick price should also be above the lower band. And here we want the bid price to be above the lower band. So now we join the dots. It should be greater. Okay. So basic requirements are pretty much clear. Then we want the candles closing to be in the green. That will mean that candle close was higher than the candle open. Last tick bid should be greater than the lower band, and the candle close on the candle 15. So here is the candle close should be greater than the candle open. So we bring in this requirement, and it is first input greater than the second input. Candle close is greater than the candle open, and now we take the difference, and here by candle difference we want the difference between the close and the open price should be greater than the 30% of the ATR. So here we have done that. So far we have defined the four conditions. Now we will also need to check for the current EMA envelope bands and the prior EMA envelope bands, and we want it to be pretty clear. So here we compare the current lower band to the lower band of 6 candle periods back, and here we want it to be greater. Current lower band should be greater than the prior lower band for a buy trade, and also same thing for the upper band. The current upper band should be greater than the prior upper band, and for that we bring in the values, and we take this high band and we compare it to the prior high band, and again the requirement is same, it should be higher than the prior band. So far so good. So we have put in these requirements. The current band, both high and low, should be higher than the bands of the candle 6 4-hour periods back, that is 1 day back, and now we take these to where they belong, and then we see what else needs to be checked for. We will need to look for the MinMax conditions as well. And after MinMax conditions, we will need to define the entry and the exit points. So here 6 conditions which we need to finish our buy side, but we need to do further optimization. And now let's start comparing the min-max requirements. And the min-max requirement is fairly simple. We want the min-max conditions to be fulfilled as well, and for that we will be comparing the min-max conditions. And here I think we need to bring in further min-max conditions. We want that at least 4 to 5 hours should have passed after the prior low was made. When the price is falling, we don't want to be buying, and to make sure we will need to compare the current minimum value to the minimum value, say 24 or maybe even 30 time period back, and I guess 24 time periods of 10 minutes will also be good enough. 4 hours, if the price action is showing some sign of stabilization, then we can look for fresh trades. So we now need to bring in further indicators, and it is min-max. We are going to similarly define the conditions for 5 minutes, that is we will be comparing the current minimum value to 15 minutes back, and that will be done utilizing these 5-minute min-max blocks of 12 time period. But here the requirement is a bit different, and now we go here and we compare these blocks like and now (10 minutes and 30-minute time period is all fine. We will make shift 24, so we will be basically looking at the minimum levels of 30 time period 4 hours back, and then we will compare that value to the current value, and we need to define when it is on the bid side we take the low price, and for the ask side we will take the high price to compare the maxima for the sell side. So now for the buy side we will need to compare the minima of the low side, lower value, and let me check which one is ask. There is bid of low price. Okay, so let us compare the minima 16 current minimum value of last 5 hours to the minimum value of 5 hours 4 hours back. So here it is, and we want it to be equal or higher. The minima shouldn't be falling anymore. There should be price stability. So that is why we are bringing in these two conditions. And also the current minima should be above. Now again we will need to look for minima 16. And here is the minima 16, and we compare it just to be sure it is good, it is correct. We compare this value to the lower band of the current 4 hours of EMA envelope, and this current minima should be above the lower band of okay. And one more thing is we want the candle 15's low to be below the high band of the EMA envelope. So we will need to take the candle 15's candle low and then compare it to the higher band candle low should be below the current EMA envelopes high band value. Okay, so things are looking good. We have defined most of the conditions, but still we will need to check if any of the condition is missing. And if we are done, we can move on to defining the dynamic entry and exit point for our pending opens orders. And we also change the lot size depending on the volatility. If there is subdued volatility, we can keep the lot size higher. If the volatility is high, we can decrease the lot size simply by looking at the ATR value. So we define that as well. We wanted the minima to be above the lower band, so we connect it here and then take these if conditions back to where they belong. So I think looking at the time, we might not be able to finish the setup today. We will plan for the pending open conditions, and then for execution we will need to bring in the calculation expression blocks as well. So it might take us a couple of sessions more. So we finish the setup here, and let us first connect these blocks, and then we will wrap it up, and then we will be back tomorrow again adding more conditions to optimize our entry and the exit. We needed the buy candle difference to be more than or equals to minimum ATR difference for buy and sell. So we connect those conditions here. We arrange the if conditions now, and we leave it for today's trading session here. So I would like to thank you all for joining in. We will continue to build the algorithm in tomorrow's session. We will be back again tomorrow. See you. Goodbye.